This would hurt a number of the automakers, particularly foreign automakers. We're talking about the German automakers, BMW and Mercedes. Why? Because the U.S. has become essentially the main export hub for SUVs, many of them sent over to China. Here's what China is proposing: an additional 25% tariff on vehicles sent over to China. That would be on top of the current 25%. So you're talking about a 50% tariff on U.S.-built vehicles, primarily SUVs and electric cars. Auto exports to China have been rising at a steady clip. Last year, the U.S. exported $9.8 billion worth of vehicles, primarily SUVs, to China. That comes out to more than 267,000 of them. And when you look at the last 10 years, you can see that this has been part of the game plan, especially for the foreign automakers. Build in the U.S., you service the U.S., and you can also ship over to China. Even with the tariff, you'll sell well over there. Today, if you take a look at shares of the automakers, we're talking about Daimler and BMW, as well as Ford, which also exports to China, and Tesla, which would be impacted by another increase in the tariff. These stocks were all down 4 to 6% this morning. They certainly have come back with the rest of the market throughohout the day.
Is one of the areas of tariff on auto parts that are brought in, not just cars?
Yeah, but the auto parts production is primarily over in China already to begin with. We actually have a huge deficit when it comes in terms of auto parts. China is ground zero for sending their parts over to us. And that, no doubt, if there's a trade war, that would be a focus of it.
And we have proposed, as I understand it, a tariff on those imported auto parts, right?
Right. But again, Tyler, this gets very complicated because a part can start there, come over here, then go somewhere else, then come back here. It's not as easy to track.
Phil, I got a quick question about Tesla, because the shares are trading as if there is no additional tariffs on top of the 25%. Is that because they are not included? Because it looks like, according to, I mean, we've got a list of all the items that are affected by the tariffs, and it looks like if there's an internal combustion engine plus one that you can plug in. So it sounded like a hybrid would be impacted, but not an EV.
And that remains unclear, although Eunice Yoon, we talked with her today, she said that she asked that question specifically to, I believe, the finance minister over in China, and they said, well, look, Tesla would be one of those that is impacted. So that's part of what's driving the concern that Tesla could face an additional 25% tariff. But again, guys, this is all negotiable. I mean, nobody's sure what exactly might ultimately be hit with a tariff.
Also, doesn't Tesla do all of its manufacturing in the United States versus other car manufacturers which already have production in China? So it would be doubly hit in that way as well.
And, you know, Phil, I spoke with one of the early negotiators, older gentleman, who had been involved back when they were reducing. I said, why are tariffs still at 25%? He said, you know what? Because 25% looked really good way back when. We had it reduced dramatically. So it's a good reminder just to know that we've been here before, and we used to be in a much worse situation, and perhaps as we negotiate, these things will improve.
And it serves China well to have it at 25% because that prompted General Motors, Ford, really all of the automakers worldwide to say, okay, and that's not just a U.S.-centric 25%. If you want to sell in China, if you're not building with a local company as your partner, you're going to face a 25% tariff, even if you're based in Europe.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.